Hey guys, welcome back. Today's stock pick is GLD. GLD is the Spider Gold Shares ETF that offers investors an easy way to buy and get exposure to gold. It buys and holds real gold bars sitting in a secure vault. By the way, if you find this video helpful, please smash the like button and subscribe. It really helps to support this channel and ensures that you get the latest updates. Okay, so why do we want to buy gold? Well, the number one reason is inflation hedge. Gold has historically been an excellent hedge against inflation because its prices tend to rise when the cost of living, i.e. inflation, increases. Gold prices have soared when the stock market plunges during high inflation years. Here, if you look at the 2008-2009 crash, gold did very well during the period after the crash up until 2012 when it started going down again when the Fed started to raise rates again. In 2020, with the pandemic, it started to go back up again when the Feds cut rates and gold prices start soaring again. Thus, gold is always a good recommended as a hedge with an allocation of 5 to 10% of your total portfolio. Okay, so why buy now if it already has run up? Well, during the past week, GLD and gold assets in general took a dump. It dropped because the expectation is that with a Biden win and a Republican-controlled Senate, any new stimulus would be smaller than a blue wave win. Hence, a smaller future stimulus means less debt and a more stable, stronger dollar. Well, so what does this have to do with gold? Well, generally, when the value of the dollar increases relative to other currencies around the world, the price of gold tends to fall in US dollar terms. Because gold becomes more expensive in other currency, this leads to a lower global demand for gold. Hence, gold prices fell, and so did gold stocks. But I don't necessarily agree with this. If you really look around, you will see that the US economy is still in really bad shape. Millions of people are out of jobs. Millions more will lose their unemployment benefits, which has expired already or is expiring at the end of December. The daily COVID cases are reaching 100 to 200,000 cases per day, and although there are good vaccine news, it may take a while before full production is available to everyone. Hence, I believe that Congress will have to pass a bigger stimulus because let's face it, the people need it. Therefore, in such a case, the dollar should devalue and gold prices should rise higher. Lastly, if you look at the TIP prices, which are Treasury inflation protected securities or government bonds, we'll see that the prices have been rising steadily over the past week. This means people are buying them to hedge against future inflation. Hence, since gold and TIPS are correlated because they are both inflation hedge assets, if smart money in general is buying TIPS because they are concerned about inflation, then theoretically gold should also be gaining value due to expected future inflation. Okay, so now that we are sure we want to buy gold, at what price should we buy it? Well, let's quickly look at the technicals to give us an idea of how to trade this. Here you can see it broke below the support at 173-ish. Then it broke further down to the 168 support, and then it seems to be heading lower. It could probably go lower still with the next support at the 164 level. But to me, the risk-reward ratio is worth it here if you believe in hedging against inflation and diversifying your portfolio against any potential bubbles. Therefore, I would start a position here at 167 and average down to 164 if it goes lower. Of course, don't buy all at once and average down, and only allocate 5 to 10% of your total portfolio. I hope this video was helpful. Thanks again for watching. Please don't forget to subscribe.